Hey Dan, how are you?
I'm great. Thanks for having me as part of this panel.
Dan, can you give us a brief introduction on what Pantera does and what are investment vehicles you currently run? What are the main differences compared to investing directly in cryptocurrencies?
Yeah, so Pantera Capital created the first cryptocurrency funds in the United States. We launched the first one in 2013, and then we did the first blockchain venture fund in 2013. Since then, we've launched two other hedge funds that trade both either liquid cryptocurrencies like Bitcoin and Ethereum or invest in projects like that a couple of years before they become public. So it's kind of like a venture style investment in protocols. And we're now launching a fund that includes the entire spectrum of blockchain assets in one. So everything from very illiquid things like venture capital, equity, and early stage tokens through liquid cryptocurrencies like Bitcoin and Ethereum.
And Dan, what can you say to investors who have not participated in the crypto trend? Is it just a bubble or a new trend becoming mainstream?
Yeah, so it's a great question, and it's part of it is answering why one should invest in cryptocurrencies in the first place. And the way I like to explain it is Bitcoin and these other blockchains are essentially the final piece of the protocol puzzle that is the internet. So the internet is a web of all these different protocols like SMTP that move all kinds of data around. And in the 1990s, Milton Friedman said the only thing missing from the internet was a reliable e-cash system. And that's basically what Bitcoin invented in 2009. And now there are other versions of blockchain that do that. So the really interesting point is you can actually own a piece of the protocols themselves. If you think back to the early 90s when the internet was starting to become popular in people's consciousness, you couldn't own a piece of the internet itself. Your only choice was to buy equity in private companies that were doing applications on top of the internet. Here you can actually own a piece of the protocols themselves. For example, Bitcoin has 21 million, they call them Bitcoins, but you could call them shares. So there's 21 million shares of the protocol Bitcoin. And so if more and more people start using Bitcoin or other cryptocurrencies, the value will go up. And so we think it's very important for investors to have exposure to both the venture equity in the space and the tokens. And the reason to have exposure, and the reason it's not a bubble, is if you think about it, all those other protocols completely disrupted and changed everything else in our lives. The way we communicate with each other, commerce, everything's totally different. But it didn't change banking. It didn't change credit cards. Credit cards still charge the same rate they did in 1958. Remittance companies like Western Union have been the same for 140 years. This is the disruption that's coming to finance, and it's coming via cryptocurrencies. And I think we're just in the beginning of a multi-decade, very disruptive opportunity here.
And Dan, um, how long do you think the effect of the third halving is going to last? Do you expect a sell-off after the halving frenzy is over?
Um, it's a very important dynamic in our industry. Every 4 years, the number of Bitcoins that are issued to the market is cut in half. And like any commodity market, if you cut supply and demand is constant, the price goes up a lot. And that's basically what's happened in the two previous halvings. We've had the number of Bitcoins cut in half twice before, 2012, 2016, and it happened in May of 2020. The first time it did it, there were only 10 million Bitcoins outstanding, and they cut 1.6 million Bitcoins out of the flow over the next 446 days, which is an important average time period. And so that was 15% of the stock of Bitcoins. And so it had a massive impact on the price. The second halving was obviously half as big in terms of number of Bitcoin, but there were 15 million Bitcoins outstanding at the time. So it was a third as big an impact on the supply of Bitcoins, and it actually had exactly one third as big impact on the price. So we used those ratios and the halving in 2020 to forecast the price of Bitcoin out from April of last year all the way through August of this year. And we forecast each month the price it would hit a year ago. We forecast that Bitcoin would hit $62,968 on April 15th of 2021. And it actually did. It hit exactly that price. So the halving's had a major impact. It's worked 3 times in the past, and we think it's going to keep driving the price up this year.
And we've seen a huge momentum on Ethereum. So then, do you think this cryptocurrency is becoming the largest crypto by market cap in the future?
Such a great question. So sometimes people think Bitcoin is the entire market. And 8 years ago that was true, but now we have many other very important cryptocurrencies. Ethereum is the second most valuable one. And the way I would characterize it is it took 5 or 8 years for people to kind of understand Bitcoin, for 100 million people to buy some Bitcoin and get engaged. People are just now understanding how important Ethereum is going to be. So Ethereum is now 38% as valuable market cap wise as Bitcoin. And in answer to your question, I can't imagine a world where Ethereum's worth as much as Bitcoin. So we're in a world where Bitcoin's going up a lot, but Ethereum's going up even faster. And we're very large investors in Ethereum and some of the subsequent protocols like Polkadot. And we have a very underweight, and in some of our funds, zero weight on Bitcoin. So Ethereum allows people to do programmable money. So the ability to have transactions between 2 people who don't trust each other, with code being kind of the custodian or the escrow agent in the middle, rather than a bank or a remittance company or whatever. And so Ethereum's been growing at a very rapid rate, and we think over the next 4 or 5 years it will probably outperform Bitcoin.
And then, do you think the so-called smart money is going to move from the majors, like the Bitcoin, Ethereum, to the altcoins? How do you expect altcoins to behave in the last stage of the third halving?
Yeah, so I do. Part of it is because Bitcoin's already performed incredibly well. Our Bitcoin fund is up 76,000%. So it's going to be very hard for it to go up that much again. It's already so big, the value of Bitcoin. Whereas these alternative coins are much smaller caps, so they can actually go up 50x or 100x. There still is that much opportunity for them, and they're doing much more kind of diverse and interesting use cases. Bitcoin itself is really good at storing wealth, so some people call it digital gold. It's really good at moving money across borders, so it's good at remittance, but it's not very good at kind of more smart contract or programmable money type solutions. And so Ethereum, Polkadot, and the projects built on top of them are really good at those things. And right now, people are getting really excited about DeFi, which is decentralized finance. And if we go back to my earlier comments that finance hasn't really changed since the internet came about, DeFi is the internet version of finance. And ultimately, I think it'll build a parallel financial system where things like borrowing and lending, which currently banks do, will go essentially peer-to-peer. That when someone wants to get a positive yield on their deposits, they'll use a decentralized lending platform. And when someone wants to borrow money at a much lower rate than they can from a bank, they will go and be the other side of that transaction. And we've seen the popularity of DeFi explode in the last 12 months. A year ago, there was less than $1 billion in DeFi, and now there's 70 billion. And while we've been investing in the space for 4 or 5 years, and we're really excited about that growth, and it sounds like a big number, there's 100 trillion of bonds outstanding in the world. So you can imagine some fraction of 1,000x return coming up.
Well, Dan, thank you. I really appreciate your thoughts, insights, and edge on this new innovation, technology, and a new asset class.
Well, thank you so much for having me, and certainly happy to help in the future.